Good morning, 99 family. Welcome back. Thank you all for watching. Welcome new subscribers, and thank you to everyone who has been subscribed and supporting the channel. If you're new to this channel, on this channel we talk about personal finance, business finance, and professional development. If any of those things may pique your interest, please don't forget to subscribe to the channel. Click the notification bell so that you can get all of the content that we put out. Definitely don't forget to give this video a thumbs up so that we can get this video out to more people, and definitely comment if you have any questions, concerns, or further video recommendations. But with that being said, let's get into the video. So today we're talking about business credit specifically. And what business credit is, because I want to give a brief overview for those who don't know what business credit is, as I've had many recommendations to speak about it. And then later on today we're going to get kind of down into the nitty-gritty of business credit, and what things you need to know to establish it, and what process do you want to go through to establish your business credit. So in this particular case, we're going to look at business credit as your credit profile for your business. A lot of people don't know. This is one of those secret tactics that you can actually have more than one credit profile because of business credit. So if you establish everything that you do to make money as a business, then you can have multiple businesses and multiple profiles, as long as you're operating all of them properly as businesses, treating them all as businesses, and taking advantage of that business credit that's available to you. This can definitely be a great asset to you. So again, business credit is your credit profile for your business. It's what separates your personal profile from your business profile. With that being said, this is a second opportunity to have great credit. This is your second chance at reviving your credit, separating out your different business ventures, and allowing you to have multiple credit profiles to leverage to go into multiple streams of income, producing multiple streams of income, or multiple investments. The next thing that business credit is financial protection. And I think this is one of those things that definitely gets overlooked when we talk about building business credit and what business credit is. That financial protection is the most valuable part about business credit, because this is allowing you to put all of your business liabilities on your business, take them off of your personal profile, and in that case you're allowing yourself the advantage to essentially lower your debt to income ratio and mask whatever debt you have on your report by reporting it under your business if it is a business expense. So if you have a car that you finance, or truck you finance for your business, you're leasing it, or you have it financed through a dealership, this is something that you could have put on your business credit, and it would not be showing on your personal debt to income ratio, which is definitely a big advantage to having business credit. The other reason that it's financial protection is that if anything happens and you've properly used and built your business credit, then your business credit score and your business credit will actually act as a shield and a veil for you, basically your business in itself being established properly will separate your business from you. So if you're getting sued or anything like that, it's separate from your business. If your business is getting sued, it's separate from you. And that will definitely allow you to take advantage of a lot of things. The next thing that business credit has, one of the trends that it's known for, is business credit generally gives you higher limits. So when you get a business card, you can generally expect that the limit on that card will be higher than if you got that same card on the personal side. And if you got a loan on your business credit profile, you could expect it to be higher than what you would get on the personal side. I've heard many different numbers and ratios. It's a very unique process of approval. So there's no real genuine number. Everyone just kind of throws a number out there and says, oh, it's 3 times, oh, it's 5 times. However, there is a correlation with getting higher limits and having a business credit profile. The next thing that I wanted to talk about with business credit and getting into business credit, which is the one that a lot of us may kind of get deterred by. However, I promise you guys I can walk you through these steps and put them into layman's terms to make them so much easier to understand. There's going to be new terms with business credit, just as there are with personal credit. So you have your paydex score, which comes from Dun & Bradstreet. Dun & Bradstreet is your new business credit bureau that you have to learn about. And their score is on a scale of 0 to 100, and it tells you your likeliness of your business falling under, and that's what banks are going to pull in order to actually determine whether or not they're going to give you a loan. It's just like your personal credit score. This will actually be the bureau that takes place of what is now your TransUnion score on the personal side. On the business side, this will be your paydex score or your Dun & Bradstreet score. Then you have your Intelliscore. Your Intelliscore is another score that actually comes from Experian. It's also on a scale of 0 to 100, and it is another score that's going to tell you basically your business's financial risk. Then you have your business delinquency score, which comes from Equifax, and this score is a score that tells you, based upon your business's credit profile, how much of a risk Equifax assumes you are. It's on a scale from 0 to 580, so it's a little different from the other business bureaus, the scoring model. However, it's not too hard to understand. Obviously, the closer that you get to the 580, the better your score is. So with that being said, as you probably could tell, there's new scoring systems. They're broken down into basically the same categories. However, certain things weigh differently on business credit than they do on personal credit. So different factors like utilization may play less of a role on the business side than they do on the personal side. And that's just one of those things. Another new thing that you're going to hear a lot of people say is vendors or net accounts. Vendors are going to be anyone who you're ordering your products from. Those would be your vendors, so like Staples, and different supply chains in places wherever you're ordering your supplies from. Net accounts are usually offered by vendors, and these net accounts will have a term, so they'll either be a net 10 or a net 15 or a net 30, which is the most common, and you also hear sometimes net 60 or net 90. And basically these are like your charge cards of the business side. You can buy a certain amount of products from these companies, And then once you've gotten these products, you have whatever that term is. So if it's a net 30, that means you have 30 days to pay it back. If it's a net 10, you have 10 days to pay it back. If it's a net 15, it's 15 days, etc., etc. And those net accounts basically are going to be your foundational accounts to building your business credit score. The next thing that you have is NAV. And there are other business scoring applications. This is just particularly the one that I use. NAV is basically your Credit Karma for your business. It's very similar to Credit Karma. So you're going to sign in. It's going to give you your business credit scores, and then it's going to allow you to actually go in and look at your scores, look at the breakdown, make sure that all of your information is correct and consistent, and just kind of help you in that sense. And our last term, but definitely not least, I feel like this is one of the most important terms on the business credit side, is a personal guarantee, a PG. You'll see some loans that are no PG, you'll see some loans that are PG. PG, or personal guarantee, means that even though it's on your business credit profile, you assume risk for that particular credit product. So if you get a credit card with a PG, that means if you go swipe up $10,000 on the card and you can't pay it back, because you personally guaranteed it, it will come back to you. However, if you get a card that is a no PG card, then it will go to your business if there's any type of delinquency with that card. That also depends on laws in your state, and again, whether or not you're properly operating your business as a business. So make sure that you are doing that when you're filing your taxes or doing your business documents, and that you're operating correctly and taking advantage of this personal guarantee or no personal guarantee option. This is why we also like to build our personal credit when building business credit, because we want to get to the point where these two can meet up, and the power of having a personal guarantee on a business credit profile is exponential, because you're taking advantage of two profiles at once. With that being said, I want to thank you all for watching. Please stay tuned today, because there will be more information coming out on business credit all day. And with that being said, thank you all for watching. Don't forget to like, comment, share, and subscribe, and I'll see you all in the next video.